On Friday, ratings agency Moody's affirmed South Africa's credit rating and changed the country's outlook to stable, saying the previous weakening of South Africa's institutions will gradually reverse under a more transparent and predictable policy framework. With us in the studio is Tanya Cohen, CEO of Business Unity SA, and Cas Coovadia, MD of the Banking Association of South Africa. And joining us on the line is Zuzana Brixiova, who is a Vice President, Senior Analyst at Moody's Investor Service. I think, let me start in the studio. Lots of sentiment that Ramaphoria, let me start with you, Tanya, the Ramaphoria definitely oozing out. Just give me a sense of how much you actually expected this, or did not for that matter.
Look, I think we certainly thought that the changes in the recent past had been positive and that they would be positively regarded by the rating agencies. We looked at the issues around political stability and certainty, the changes in leadership. We looked at issues around growth and certainly around the budget that was very solid and the increases in terms of VAT and debt stabilization. And I think that those certainly signaled that this was a possibility, but certainly we were very encouraged that it happened.
And Cas, I just want to touch on what she's saying as well. In your statement, you did mention that this was a positive move for both businesses and consumers. But we obviously need a little bit more than policy certainty to really ensure South Africa's growth in real terms. I mean, an economist said we'll need about 5 to 7% real GDP growth to really see the changes on the ground. Your thoughts?
Yeah, no, I think obviously this is very good news, the Moody's rating. And us putting us on stable is excellent news. I think it's as a result of the positive development since December. But the real work starts now. I think that we should not underestimate the damage that has been caused in the last few years. I think that we all now need to put our shoulders to the wheel to actually get beyond the euphoria, if you like, and get down to the hard, winding, long road of recovery and rebuilding. And I think Moody's in its statement did say that they will now look for initiatives that actually produce growth, initiatives that actually continue the good work we started on the SOEs. And it's not just growth, we need inclusive growth. We need to get to 5-6% growth rates and maintain that over quite a considerable period of time. And we can only do that if the majority of our people are part of the economy and have a stake in the economy, so the growth has got to be inclusive. So I think that we need to, it's what the Director General and National Treasury said, we shouldn't waste this opportunity, and we need to build on this, and we need to build on this putting all our shoulders to the wheel. We're all going to have to make compromises and trade-offs, but that's what we now need to start doing.
Right, Zuzana, I want to bring Zuzana into the conversation here. Fiscal stress and fiscal consolidation. You do actually mention fiscal consolidation here on the release, but one might argue what the projection of 55% debt to GDP ratio for between 2018 and 2020, if SARS does not have that capacity that you're actually looking for, how probable is South Africa going to be having that fiscal stress?
Well, we're actually seeing that the current budget is based on relatively conservative projections when it comes to growth and revenues. Actually, growth has surprised twice on positive side, only marginally in 2016, but in 2017 we projected something between 0.5 and 0.7, and it turned out to be 1.3. And then again, it could be that although in 2018, we see slightly higher growth than what is currently projected, which is around 1.4 or 1.5% of GDP. We also think that it was a bold budget in the sense that the VAT was a reform that South Africa has not done in several decades. It's also a tax that's relatively easy to collect, and it's more growth-friendly certainly than, for example, corporate income tax would be, or then even personal income taxes increase would be, even though there is some contribution to the budget. What will also be important is to contain expenditures, and we see some risks to the budget from that side, especially in the run-up to elections. And how the government then will balance these objectives of growth and fiscal consolidation with social pressures will be key in determining the success.
Yes, Zuzana, speaking of the different pressures, in your statement you do talk about the fact that the State of the Nation address really had some ambitious policy reform initiatives or ideas. And based on this thought that Moody's has, are you confident that South Africa will be able to carry through with the policy and fiscal initiatives that it's looking to put in place?
We have already seen actually quite important reforms in some areas from this new leadership since the start of the year, and actually budget has been the return to planned fiscal consolidation is one of those reforms, and we of course saw changes in governance of state-owned enterprises and also replacement of leadership in some key ministries with a credible team which reduced policy uncertainty. Of course, structural reforms everywhere are challenging. It's rarely a linear process, so there will be setbacks, and we may already see it in the IPP program where those were supposed to be signed 2 weeks ago. There is some delay, but again we expect this to come through in due course. Key from our perspective is, for example, the mining charter, which would put regulatory certainty into the mining sector, and reform of state-owned enterprises. So we saw governance reforms, but it will be also important to put them on financially sustainable footing.
Right. I want to bring it back to the studio. Maybe moving on to Tanya. You did mention that the business parties were actually were also on the roadshow just recently this month. How is the reception, even before Moody's actually came out and gave this much of a reprieve? How was the reception?
Well, I think that, first of all, we accompanied the National Treasury team along with organised labour, and we met with the rating agencies as well as a number of international investors while we were there. And I think the themes that Moody's captured so succinctly were actually resonated through a lot of the engagements that we had on the International Investor Roadshow. So the issues around the change in political leadership were certainly very positively received. The changes in institutions, the changes that had taken place at Eskom and at SAA, the indications coming out of the State of the Nation address that SARS would be addressed shortly, and then the indications around policy certainty and in terms of how the budget would be managed were certainly positively received.
Cas, I just want to get your thoughts on something that Zuzana mentioned earlier was policies around the mining charter, and another one is the land expropriation without compensation bill that's currently being debated. You speak about one of the things that need to be done to really improve the state of the economy in South Africa is the ease of doing business and the ease of stakeholders being able to carry out that business in South Africa. But in your thoughts, policies like the mining charter, which is again under review, as well as the land without expropriation, the land expropriation without compensation bill, your thoughts on how that affects the ease of doing business in the country?
Well, we saw the damage that an inappropriate addressing of the mining charter has caused. Okay. Since the changes in December, we have a new minister, and Minister Mantashe is moving fairly swiftly to try and address it. And if we do get a reviewed mining charter that has the buy-in of all the critical stakeholders in place, I think that will go a long way towards rebuilding confidence in the mining sector. The land issue, I think we need to get beyond the rhetoric and beyond the emotions and accept that given our history, given a lot of issues related to land, this is a legitimate issue. Okay? It would be foolhardy to say that we have dealt with the fact that the majority of people in this country were actually deprived of their land through theft, essentially, okay, in the apartheid days. We need to address that. That doesn't mean that we do that in a way, and the president was quite clear in his SONA address that we want to do this in a way that does not actually threaten food security, that promotes agriculture, including commercial agriculture. And what we now need to do, and I see the review panel as well as the government has come out with a program of engagement. What we now need to do is engage thoroughly and put on the table workable options for land redistribution that actually does meet the requirements to build our economy and to ensure that we maintain investor confidence and to ensure that we have certainty as far as property rights is concerned. Okay? And I think we can do this. I think we can do this if we put our heads together and put some workable options on the table. But to scaremonger and say that farmers are going to lose their land and people are going to occupy, although people have occupied, but government has moved swiftly, I don't think is a very constructive way to go. I think it's something we can do, provided we put our heads together and we put workable options on the table.
Zuzana, let me just bring you in before we let you go and close this particular one. Growth, where do you see this actually going if you want to put it on a ballpark, given the fact that maybe the bonds are having a relative recovery?
So going back to the issue of land reform, similar to some other issues that have been discussed, this could go in various directions. Currently, there is a lot of uncertainty. It's not even clear which land would be subject to the land reform. Is it agricultural land only? Does it include urban land, etc.? To the extent that there is unused land in South Africa, it's an unused resource, so if brought into agricultural production, so just as there is a lot of unemployed labor, this could actually be production and output enhancing. But of course, if this were to raise uncertainty and there were expropriation of land, this could also deter investment. So again, like similar other initiatives in South Africa, more clarity is needed, and we will carefully watch and follow the steps that the government is taking in this regard.